Do you want to organize your finances, create wealth, and transform your wealth into a legacy? It's time to start today.
Welcome to Octane. My name is Andrew Wall. I'm the managing partner of CPA for IT.
And I'm Rachel Stedman, head of customer care.
Our new podcast designed to give your small business the fuel it needs to succeed. Hey, everybody. It's Andrew Wall here, managing partner here at CPA for IT. I'm joined by my colleague, Rachel Stedman. And today we wanted to have a discussion about T2200s. We know it's coming to that time of year where it's time to start figuring out, will you have any expenses to claim on your personal tax return? What kind of tax planning do you need to do for RESPs and RRSPs and all those fun tax planning questions, which I promise you we'll be coming to you with another podcast to discuss the differences between tax-free savings accounts, RRSPs, RESPs, and all those different additional strategies that you may want to make use of. But for now, we really wanted to talk about a T2200 and what that is. So Rachel, would you mind telling our listeners what exactly a T2200 is and who it's for?
Certainly. So a T2200 is a declaration of conditions of employment. So this is typically a form that is used by very specific industries, individuals that are possibly working at agencies or even commission workers. And what it allows the employee essentially is to be able to write off different expenses. And the expenses are based on the conditions of their employment. So whether it might be use of their automobile, maybe it might be use of their home, or even meals and entertainment, different things along the lines of that. So just allowing them to be able to write off these expenses which they're incurring to assist with them generating their income as an employee. So this has been around for quite some time. Not a lot of individuals are aware that this existed until the T2200S came about, and now it's applicable for all other employees since COVID.
And I guess we don't know yet whether that's going to be available for the 2021 tax year, correct?
I actually have good news. So I was just checking the CRA website and they just updated it 2 days ago on January 18th, which is perfect. So yes, so they are also allowing the T2200S for the 2021 tax year for all individuals who are working from home. So again, that was the T2200S was introduced in 2020 due to COVID. And of course, there's a flat rate, which allowed them to get some reimbursements for working from home, and then the full declaration of conditions of employment for working from home due to COVID, which is the T2200S. So that came about in 2020. And yes, we were anxiously waiting to see if it was going to be released for 2021. And so said, so done. So that will be pretty good news for a lot of individuals.
Yeah, and understanding for that home office, whether to use the detailed method or not, really is important to sort of look at your individual situation to figure out what is better for you, because they have some specific rules on how you calculate that home office. And Definitely. Unfortunately, there's a lot more benefits to someone who rents than someone who owns when it comes to that detailed calculation. I don't think
last year we went through it when we were really trying to figure out, which way works best for individuals if they're renting versus if they're owning. So yeah, I know we kind of really were shuffling through it because it was new last year, but I guess definitely this year we'll be able to give clients a little bit more guidance because, we've been through it at least one time last year.
Absolutely. And I think when we look at the traditional T2200, if you're, a commission-based employee or you have an employer who's provided you with the T2200, it's important to know what that allows you to do. So the T2200, first and foremost, you have to keep a record of it. It's something that would be provided to you by your employer. And the employer is going to basically tick off a number of boxes. And based on how they complete that T2200 form, that will dictate what you're allowed to claim as potential expenses on the T777, which is the form that employees can use to deduct deductible expenses for employees. Now, there's a
Mhm.
couple of caveats here that they can't be reimbursed by your employer, because if they're reimbursed, obviously it's the
Mhm.
employer that's deducting it. And
Mhm.
then, of course, there are some limitations with the individual categories. Um, Sorry, go ahead, Rachel.
That's very true. Yes. So it's essentially this form. It's not a carte blanche where anybody just writes off anything, right? It's very specific. You can only deduct what the employer specifically puts on this form. So if they say there's a certain percentage for your home office or a certain percentage for your automobile, you must comply, right?
Mhm.
I know some clients that say, well, hey, my employer just gave me a blank form, which we shouldn't be saying that, but the whole thing is that you really do have to follow it. If they're also reimbursed expenses, the employer also typically does include all of this information.
Yeah.
And yes, it is very important that even sometimes clients will come in and say, yeah, my employer gave me this and these are my expenses. But even when we're filing the tax return, we need to see this form, because what's recorded on that form, we have to then record it on your tax return preparation. And that's also what, again, as you mentioned, it's pulling up the different expense deductions that they're allowed on the T77 form. So yeah, it is very important that when clients receive that they do keep that. Typically, this form is given to employees when their T4s are issued. So if they get their T4s, which is at the end of February, that slip comes with it.
Yeah.
And that's what they definitely want to hang on to when it's time to do all of the tax filings.
Absolutely. And you got to keep that too. If you're ever audited, you need to have that, because you're not going to we'll need that as your accountant to prepare your personal tax return to figure out what you're actually eligible to claim. But we're not going to be submitting that to CRA on your behalf, but you will need to keep a copy of that in case CRA ever comes knocking at
Yes.
your door. Now, for those people who have been given effectively carte blanche on this T2200, effectively all the boxes have been ticked. I'm going to give you some idea of the types of things that you can claim. So the great news is accounting fees and legal fees are deductible. You can have
Yes, they are.
advertising. We talked already about motor vehicle expenses, and there's some specific ways in how that's calculated. You've got food and beverage expenses, as long as you're doing that for traveling. You've also got entertainment, networking, business promotion type of expenses. You've got potentially lodging and parking and travel. There's even special clothing. Now, clothing, we talk about specifically, this is a really unusual area, because once upon a time they used to allow like suits and stuff like that. And CRA has come in and been a lot more conservative in their approach. And they're basically saying, if it's anything that you could wear on the streets, that's not special clothing. Whereas if it were for a stage performance or something like that, or a uniform, that is potentially deductible. But again, this is CRA's position. It's not necessarily Income Tax Act rules. It's the way CRA has chosen to interpret those rules. But the problem is, are you really going to fight CRA and go to tax court over some business clothing? Unfortunately, probably not. So take that with a grain of salt on how aggressive you want to be on your special clothing.
Pick your battles with CRA.
Yeah, pick your battles with CRA, absolutely. Then you've got computer supplies, cell phones, and other equipment. You've got the office and home office expenses, as we've talked about earlier, training costs, and again, I think I said travel costs, but just in case I didn't, I'll mention that one more time. You've got your travel costs. And then sort of one of the other key ones, and this is a special tick box that is on the T2200, is if you have been allowed by your employer, you have the potential to potentially deduct having subcontractors or employees who are assisting you with your role as well. So the most important thing to know and understand about the T2200, it's an incredibly powerful tool that allows employees to be able to deduct expenses, which is typically only available to small businesses. And every dollar that you deduct as an expense is a dollar that you do not pay tax on. So this is a huge, huge, huge win. But like we said, it comes with a couple caveats. You have to actually need these supplies to do your job, number one, and your employer has to not be paying for these supplies on your behalf, number two. And then, of course, they're all subject to the general reasonableness rules that CRA has always applied to every deductible expense. But of course, reasonableness is very subjective. So what you consider reasonable, what I consider reasonable, what CRA agent considers reasonable is very, very subjective.
Completely different. Yeah.
Yeah.
The other thing I think as well, most people get the T2200 at the end of the year, and then that's when they start looking into these expenses where,
Mhm.
maybe it's possible that throughout the year they didn't know what they could deduct. They didn't know what they should be keeping receipts for. So it's very important that you really educate yourself from the beginning. So you make sure you're not missing out on those deductions. Because again, like Andrew, as you said, you need to keep these receipts, you need to keep these documents in case you're ever being audited. And it's always better to be proactive than being reactive. So when you're trying to, scramble back and figure out, did you keep receipts for something? And not to mention, of course, credit card statements or bank statements, they're not considered receipts. Many times clients say, oh, well, it's on my credit card statement. I said, that's great. I mean, it says Amazon, but it could be anything, right?
That's a
That's not a
really,
proof.
really, really important point, because I've seen people
Mhm.
who think they can rely on either a bank statement or a simple spreadsheet and be like, yeah,
Yeah,
here's my expenses. But no, that's not
doesn't cut
valid
it.
documentation when it comes from CRA standpoint. And then the other thing is, you know, there's the notion that a lot of people don't know, but we as accountants are very well aware of. Receipts fade over time. The receipts
They do.
that people are printing on now are heat sensitive. If you leave them on your
Yeah.
dashboard, they will fade. There's a viral video on TikTok out there where a woman takes her receipt and then takes her hair straightener and goes across the receipt, and the whole receipt goes clear.
Yeah.
So
Yeah.
if you didn't know, now you know, and there's no excuse not to take advantage of the technology that is out there to help you capture these receipts. Every one of us has a smartphone.
100.
You
Yeah.
know, even if you're not using one of the amazing tools like Dext/Receipt Bank, which we actually provide to all of our clients completely free of charge. And check it out on our website, cpa4it.ca/receipt bank. We provide that tool completely free of charge, which is an OCR tool, which will pull out the data and give you a spreadsheet that you can use and create all sorts of tables and charts that you can use for preparing your year end, which that's amazing. But even if you're not doing that, you should at least be taking a picture with your smartphone and keeping that in a folder somewhere, so that if CRA comes knocking at your door 3-4 years down the road, you have those.
You have it.
Because if they come knocking and you don't have it, you're going to be disallowed that expense, and they're going to charge you. They're going to charge you the tax on that, plus they're going to charge you interest and potentially penalties.
Yeah, definitely. A lot
yeah.
of clients like the shoebox method. And, I always say,
Oh, it's terrible.
you
I
may
hate the
put
shoeboxes.
everything, you may put everything in that shoebox and, say, yeah, everything is there. And then, like 3 years come down the road. Okay, sure, you didn't take a flat iron to it, but, you figure everything is there. And then again, these thermal receipts, they do just fade away. So, I tell clients, you like the shoebox method, then try the digital shoebox method, right? Take a picture and just put it in a folder and let it stay there, so that you are able to, go back to it. But of course, I mean, that's better than the physical receipt, but definitely using the different tools that are out there like Dex is the best way to go about it, right? It's definitely going to help you long term. And again, just being aware of what your deductions are and educating yourself is just going to be very important. So I think that's the only thing that's, I guess, for a lot of individuals that do receive a T2200, that unfortunately, especially if it's the first time, they're not really aware of these things from the beginning. Maybe, after the first year, they learn a little bit, but, the whole goal is
usually,
to really
right?
Yeah. So the goal is really just to kind of make sure that you are, fully aware, so that you're not the one that's losing out on all the potential benefits that, you can have from having a T2200 and being able to report all these expenses.
Yeah, excellent point. And the thing is, I think the reason that so few people do a good job on the documentation these days, because it seems to be getting worse and worse in my experience, is because there's so many amazing tools now, like Mint and those types of tools, where you can get this data sort of aggregated for you, which, hey, I'm not saying don't use those. Those are great tools for simplifying your bookkeeping process and keeping track and doing budgeting, which is really helpful. But don't forget, just because you have done that, just because you've used the CSV off your bank statement or your credit card statement, which can be really helpful from a bookkeeping standpoint and sort of getting the numbers ready for your accountant, it does nothing from your documentation standpoint. And
Very
so
true.
we have to remember, like, hey, you can use both in conjunction, right? Like, even if like you take pictures of the receipts and you do all of your bookkeeping from your debit card and your credit card statements, I'd rather you do that then just do everything from your debit card and credit card and not capture your receipt anywhere, which is what so many people are doing. They're either
Well,
using
not.
Mint or they're using their feed from their debit card or their credit card, and doing all the bookkeeping that way, or worse yet, just guesstimating. Do not
But
guesstimate your expense,
But
please.
Andrew, correct me if I'm wrong, because I think you know this very detailed. But even when you use Dex and you take a picture of your receipts, it also does provide for you a bit of an expense report, which you can use at the end of the year as well, right?
Absolutely, and that's why I love
Hmm.
Dex, because Dex is going to give
Hmm.
you the documentation as
Hmm.
well as the bookkeeping. So the only
Hmm.
thing you do need to do in Dex is to choose a classification, right? So we talked already
Hmm.
about the types of things that you can deduct. So when we talk about accounting fees, advertising, allowable motor vehicle expenses, food and beverage, those are expense categories, right? So when you
Hmm.
spend money somewhere, you have to decide, when I went to Canadian Tire, was that a motor vehicle expense or was that,
Hmm.
food and beverage, right? Um,
Who's buying food at Canadian Tire?
yeah, exactly. Well, yeah, I guess that's okay. Maybe a bad example, but maybe that's a computer supply, because they do sell computer supplies there. Not
They
very good
do, they
ones, but they
do.
do. Okay, so the Bay might be a bit of a better example, because the Bay has some really nice restaurants, believe it or not,
They
especially the one
do.
down on Queen Street.
They
Um,
do.
but the reality is that you have to categorize these transactions, because
Hmm.
while the system has the ability for you to create rules by supplier, it's not a AI-driven tool the way something like QuickBooks Online or QuickBooks Self-Employed is. And those are
Hmm.
other tools that are available out there, but with those come more costs. And I'd say if you're looking at a T2200, QuickBooks Self-Employed is a tool that comes with a receipt software, but unfortunately, we can't give you that tool for free. And it is really
Right.
powerful. We've also seen some
Hmm.
people go like really robust and use QuickBooks Online, which is really meant for businesses, not a personal tax return, but it can be used for a personal tax return, but it's overkill.
Hmm.
Um, so with Dext, all you have to do is take a receipt, or take a picture of your receipt. It's going to pull out the vendor, the amount, the tax, which, by the way, you have a potential, if you're T2200, to get a GST, HST rebate on the expenses that you paid for through the business
That
as
is
well.
true. Hmm.
So being able to break out those expenses, and remember that it's not 13% if you're here in Ontario on every single expense, right? If you have a meal and entertainment, there's going to be tip, and we have all sorts of different expenses that it's not going to break out to exactly 13%. Go look at your cell phone bill. It's not 13% of the total, so you can't just break out 13%, or you're going
Right.
to get yourself into some hot water. So leverage the power of this technology that can OCR, which is optical character recognition, which is basically take the information that it sees visually and convert that into data that you would have in a spreadsheet. And then you can just download the spreadsheet at the end of the year, run a pivot table, and give that pivot table to your accountant, which is going to have all your transactions summarized by the account that they'll need for the T777, which is the form we use to be able to deduct these expenses, and give you the detail to drill in if you want to look at something. And of course, you can always go into that spreadsheet and change the categories around if you need to. Or of course, you can even do that in Receipt Bank, which has a
Definitely.
great mobile app as well as web-based app. And we've got a ton of information on our website, like I said, cpa4it.ca/receipt bank.
Not to mention as well, Andrew, with receipt bank decks, you also got to customize email. So even if, like, let's say, for example, you're paying for a lot of things with Amazon or whatever the case is, you don't have to take a picture of that if you have an e-receipt. You can actually send it directly to your Dex account, which, because, a lot of people buy everything online. So they might,
Or
have a
even in
lot
person,
more
when you go to
receipts.
Shoppers or Home
Yeah,
Depot
that
these
too.
days, they ask you, do
Yeah.
you want this receipt sent to
Email
an
to
email?
you.
Yeah,
Yeah. So you can definitely just, forward that over to your Dex account. And again, voila, your receipts are being stored there as well.
absolutely. And the thing I love, like, I don't know if you've noticed when you go to a vendor who's got, a Stripe or a Square account, once you set up
Hmm.
that email once, that's it. It'll always remember that email,
That is true.
which
Actually, I don't like
is,
that though, but that is
see,
true.
I do like that, because I'm like, I don't want to be writing my email out every time.
I'm like,
Um,
no, everybody has my info. But yes, there definitely is some benefits to it, I guess.
The other advantage you're going to get with Dext is in addition to that email address that you mentioned, where people can email it in, they also do a fetching, and I think they've got literally over 1,000 vendors,
Hmm.
like Amazon, that they allow you, and Best Buy would be another example, where they allow you to connect to those vendors who have online portals, and it'll pull
Hmm.
in the transactions automatically without you forwarding the email.
Oh,
Now,
nice.
yeah, the fetching's a pretty cool feature, but I will be honest about fetching. Much
Hmm.
like things with bank feeds and anything that's relying on scraping a website for data, is thanks to multi-factor authentication, which is a really important tool in this modern age with cybersecurity issues like we have. Um, Unfortunately, those feeds and those connections do break periodically. So
That is
I
true.
would lean first on the email strategy, and use the fetching as a backup strategy. And the great thing about Dex is it'll also tell you if it's duplicate transaction. So it's looking
Hmm.
at
Yes, that's true.
amount and date and all sorts of business logic. So it's not true AI yet, although I think that's the goal for the product. It is very much business logic driven. So like I said, you can create rules for vendors. It's going to be able to tell you if there's a duplicate based on the date, the amount, and the vendor. It's going to get the date 90% accurate. Now, the one thing I will give everyone a heads up about Dext is if you take all your receipts and go to scan them at the end of the year, the accuracy on that date format is going to diminish significantly. And the reason that is because they're using business logic that says, hey, if the date format of day, month, year is within the last 3 months, then use that format. If the date format of month, day, year is within the last 30 days, use that format. So, because different vendors use different date formats, as you can imagine, all across
Right.
Canada, let alone you could have vendors from all over the world. And it does recognize different currencies too, which is pretty cool. For the most, if it's
Nice.
listed on the receipt, that's a big caveat.
Okay.
But it's quite good about doing foreign currency calculations and stuff like that, which is a whole nother aside. But it's a really amazing tool that I think goes a long way, which is why we as a firm have invested so heavily in this, because it's not free for us. I can tell you that now. We pay Dext or Receipt Bank a pretty big bill every single month to be able to provide this technology to you guys. And if
To
you
our clients, yeah.
go check out their website, see the retail pricing. You're looking at minimum of $10 a month for their bare bones package, and we're offering you completely free of charge as a client of ours the full-fledged package, which is something like $60 a month or something like that. I can't remember the full retail price. Maybe, Rich, I don't know
It
if you
is a
know.
bit hefty. It is a bit hefty. I'm not
It's
sure what it
hefty,
is, but I think
worth
it's a bit
every
hefty. Yeah.
penny when you go through an
It
audit,
is.
worth
It is.
every penny when you go through an audit.
And I
Um,
think that's the thing, though. Clients, they fail to realize that, CRE can audit you up to, what is it, 6 years? Like they can go back. So it's so important. And, I know we joke around, around the summertime, it's like that is like CRE personal tax, like audit season.
yeah,
So it's so important that you keep these documents. I once had a client and well, why are you giving this to us for free? And I'm like, well, for us, we're doing your tax returns and we want to make sure that you are being able to benefit from all your deductions. So it's us investing in clients to help you be able to maintain your expenses and maintain your deductions, right? So it's really just a way for us to really be able to help clients so that you're not losing out down the road.
yeah, and
So
I think, to be honest, we want to
invest.
help clients and we want to help the general Canadian business economy. I mean, let's face it, this whole podcast episode is mostly geared at people who aren't even our clients, right? We
Very
specialize
true, very
in
true.
small businesses, right? So employees is not really where we serve. But T2200s is a really important thing that we want you as employees and Canadians to know that this option is out there, so that you can go and talk to your boss and say, "Hey, I've had to work from home and I've had to go out and buy a new computer and a new monitor, a new chair, and all sorts of new costs. Can you give me a T2200 so I can claim that
Well,
on my
here's the
tax
other thing
return?"
though. Here's the thing now with the standard T2200, that's typically catered to very specific professions, right? But then the T2200S, okay, so that one is really introduced where primarily for individuals working from home, due to COVID. I remember last year, clients were saying, well, I had some people say, well, my employer's not giving me a T2200S, which now it is at the prerogative of the employer if they want to give you a T2200S. Okay. You can ask for it. But even if your employer does not give it a T2200S, does not mean you don't get to benefit from, some deductions working from home. So CRA has what's called a flat rate calculation for working from home. So it's not to say that, well, my employer did not give this to me, so I don't get to write anything off. CRA does allow that. So that's another very important thing that, all employers may not give it. I think it's really at their discretion if they want to give it. And even if they don't, at least you can still use the flat method to be able to, the flat method that CRA has to be able to get, I think last year it was up to $400, I think a maximum deduction, Andrew, or maximum credits. I'm not sure if they've increased it for this year. We should definitely check.
Yeah, we should.
But
I unfortunately don't know that off the top of my head. We'll have to Google that and come back to everyone. And to be honest, I think we're going to be putting more information about the T2200 on our website. So we'll be updating that blog content with any changes that come, because here's the reality: this stuff changes from year to year.
It does.
So we do have content on our website. We will do our best to make sure that's updated in a timely basis every year, so that when you go to our website and you search for content in our blog, which is quite lengthy, we've got quite a few articles in there, that that information is up to date. And you can always tell when you do look at our blog, it does tell you the date that was updated. So keep that in mind when you are reading our content. Like I said, we've got a lot of articles in there. If you're reading one that hasn't been updated from 2017, recognize that there could be changes, and I strongly encourage you to reach out and speak with your account manager or your accountant to make sure that
so actually
is still accurate.
I'm quick on getting data. So actually they've increased it from 400 per individual in 2020 to 500. So they've already said the increase is 500 for individuals in 2021 and 2022. So they've already identified what it's going to be for this current tax year. So there's a bit of an increase. So at least, there is the ability to get that full $500. But again, even with the CRA calculation, it's very specific because they calculate based on how many days you're actually working from home. Now, I know last year in 2021, when there were some of the COVID restrictions lessened a bit, some people did end up going back to the office. So as a result, so they do say it's essentially you get in $2 a day with a maximum of up to $500 that you're getting. So which means that if you ended up, working half the year in office and half the year from home, you're not going to get that full $500 maximum on that flat rate. So that's definitely something to keep in mind. It does depend on the percentage of your working from home versus your working in office for the last year.
Oh, look at that. Rachel, thank you for being so timely. Now you don't even have to go to the blog for the latest updates. But if you're listening to this in 2023, you should go to the blog because there might be updates and changes since 2022. So on that note, Rachel, it's probably time to wrap up our very first initial podcast for CPA4IT, but this is our first, definitely not our last. And if you guys out there are listening and you would love to hear specific topics or guests on this podcast, please let us know. And we want to take your feedback and incorporate it into this podcast. So hopefully we're driving more value for you.
Definitely. And yeah, I think, Andrew, what we should do, I guess, more moving forward is, we'll at least try to provide some topics of, what we want to touch upon in the future. And maybe some people just have questions in advance that they maybe want to shoot out to us based on the topics, and we'll definitely be able to try and answer them.
Yeah, I think what we'll do is we've got this new content that we're actually planning. We got 36 topics that we have outlined that are geared around our core values, which is helping clients organize their finances, create wealth, and transform wealth into a legacy. So those will start with our core concepts, as well as, of course, we've got lots of content that we've been producing over the years in different webinars. We'll be making sure to include things like source deduction planning, the difference between a salary versus a dividend, all
That's
those
always a hot
common
topic.
questions that we get. Should I buy or lease my car? Can I deduct my golf expenses? We're going to have topics on all these hot areas to make sure that we're giving you guys new content in a digestible format that people are switching to. It does seem that a lot of people like the ability to just listen while they're out for a walk, which is, I'm walking while we're doing this podcast here on my treadmill. I hope you can't hear the background noise.
No, we can't hear it.
But this is what we want now, right? We want to consume information in different ways. So we're going to always continue to offer you our blogs. We're going to continue to offer you our social media channels. We're going to continue to offer you our webinars. And now we're reaching out and bringing you content in a new format, which is our podcast. So you can listen while you're, running around the house, chasing the kids around, or going for a walk to get your steps in for the day, whatever the case might be. We've got a new way of digesting content that hopefully is going to help you organize your finances, create wealth, and transform that wealth into a legacy. So with that, thank you, Rachel, for joining me today. And we'll be back
Andrew.
soon with another episode. Bye for now, everybody.
We will be back. Okay, bye.